Hello everyone, welcome to this new session of Capital B Talks. Today with Andrew Webley, the CEO of the SmarterWeb company, the leading Bitcoin treasury company over in the UK. This is an amazing opportunity to discuss Bitcoin treasury companies, Andrew's journey into Bitcoin and in the UK market and the global markets with the leading Bitcoin treasury company in the UK. And today we will be discussing a lot of hot topics. These days we'll be also willing to take some step backs and reflect on the journey and also look forward to what could be happening in the future. So let's start straight into it. Andrew, how are you doing?
Yeah, I'm pretty good actually today, thank you. Yeah, and it's nice to see you again. We've not spoken for a couple of weeks, I don't think.
Yeah. Um, so I think that I think we can then start with some questions. Have you how was Singapore first? I guess you were there, right, for token 2049?
Yeah, well, it was different. Is probably the best way of putting it. I'll be honest. Like I always, say what I think, and I didn't enjoy it as much as I've enjoyed some of the pure Bitcoin conferences. It was very different in that regard. But I did enjoy some bits of it. Like it was quite good seeing the other treasury companies that aren't Bitcoin treasury companies speak, and to see, some of the things that we worked out quite a long time ago. They're just starting to think about some of the things that we have to think about. That was quite interesting. Um, I think the conference was actually pretty well produced, actually, sort of in its entirety. It was a big conference, but just for me, it wasn't as good because I like a pure Bitcoin conference where everyone's talking about Bitcoin and then things on top of Bitcoin, whereas there were lots of things that I don't necessarily sort of agree with. In terms of the assets that some of those people care about. Tell you what was very interesting though, and that was a lot of the people, the senior people there that I was speaking to, when they were speaking to me away from everyone else, they're all saying that they're Bitcoin maxis anyway. So, you know, found that quite surprising, but in a good way. But yeah, it wasn't as much fun as some of the conferences that I've been to, if I'm honest about it. But I'm glad that I went to it, and I think it was beneficial for our company. I've already had some sort of follow-up conversations for some of the people that I've spoken to, so that was the point of it. At the end of the day, it was to go somewhere to speak to some people that perhaps I wouldn't speak to otherwise.
So, Andrew, I think a lot of people will be interested to hear your thoughts on the journey at the Smarter Web and to look at where you are right now. What are your thoughts on the market? And what is happening right now in your eyes?
Yeah, so it's been an interesting year, for me personally, and for my company or our company, whatever you want to call it now. So I set my business up 15 years ago as a small technology company in the UK, and then I found Bitcoin approximately 8 years ago, and then I found Strategy about 5.5 years ago. And then obviously I started the search a few years ago of how I could invest in a company like your company, my company, Strategy, Metaplanet, etc. But a UK company, which is how I ended up listing my business, because there wasn't one in the UK, so I listed my business. So, we IPO'd. I don't know, approximately half a year maybe after you announced your strategy, because you were very, very early, not as early as Metaplanet, but very early relative to what's happened this year. Um, and the first few months were pretty fantastic, really, in terms of the growth and how that allowed us to add Bitcoin yield for our shareholders. And then round about let's say August or whenever it was, 6 weeks ago, something like that, 8 weeks ago, was when the industry, the sector, really started to come under a bit of pressure in terms of the price, and there's lots of reasons for that. Whether you blame it on the pipes or you just say that it's one of these things of a market getting too ahead of itself, or there's lots of explanations for it. And then obviously since then, we've been like everyone else in this period of MNAV compression, which, I personally believe we're getting right at the end of that phase now. So, it's different. It's not as much fun in some ways when it's harder to raise capital, it's harder to deliver Bitcoin yield, and all the things that we enjoy doing. But nevertheless, it's quite good because life isn't always easy, and I think when times are tough, it shows who's good at delivering their strategy. Because I'm sure you feel the same as me in the sense that what we're doing here is we're doing a mission that we've signed up to for the rest of our lives effectively. This isn't a 6-month strategy, a 1-year strategy, a 3-year strategy. It's a 5, 10, 20, 30 year strategy. And when you've got an outlook that's long term, as it should be, clearly you're going to get some very, very good times and then some less good times, in that time period. So yeah, it's been a great year so far. But it's, for me, it's all about where we're heading for the future, and I'm incredibly excited about the long term. But I'm also very excited about the next couple of months, for some of the reasons that I've talked about already.
You mentioned MNAV compression and the price price action that's been going on in the Bitcoin Treasury company sector. What are the state of the discussions that you have with investors, and or have you seen even in the last 3 months any shift? What is your view, maybe as well specific to the UK market? Do you see any evolution? What do you see in that respect?
Yeah, so there's a couple of sort of answers to that question. So firstly, in the UK market specifically, the institutional investors are starting to understand the model more. So that's great. They didn't really understand it, 6 months ago when we started. The retail investors very much get the model. Very much get it. So that's quite interesting. And that's just a time thing, over the coming years, as we all do more work on, educating. We do a lot of work in the traditional media. I've been speaking to one of those big publications again today about another matter. And that will get that message out there over a period of time. What I've noticed on a global stage is similar as well. But I have noticed that particularly on the global stage, there's been a bit of saturation by, 3 months ago or so. There were people getting involved in the space that perhaps didn't care about Bitcoin and Bitcoin yield and, all the things that we care about. But they were just viewing it like a trade. It was a very hot sector where they could perhaps be involved in for a short space of time. So, as I say, I believe that is sort of being all washed out now, and probably washed out now. So that's quite interesting. It just takes time to educate people at the end of the day, in terms of what we're actually doing, because the metrics, I was speaking to somebody yesterday, believe it or not, who didn't actually really understand the concept of Bitcoin yield, and it was incredible, when I think who that person was, and so it just takes time to get the message out there, when you and I were in New York for the Bitcoin Unconference, Saylor was talking about how this is year one of this new sector. Obviously, strategy's been around for 5.5, whatever it is, years, and Metaplanet for almost 2 years. You know, and that's the way that people need to look at it. You know, this has suddenly sprung up on this scale. You know, we believe these companies are going to be the most valuable companies in the world in the not too distant future. So, you know, clearly it's going to take a bit of time for that to play out. And the funny thing is, from my point of view, is when I look at the MNAVs and how we're priced now, you know, so we're not that much above a 1 MNAV now. And when you look at that and you think about the Bitcoin yield that we're delivering, will deliver, have delivered, you know, it's completely mispriced. And I think that's because there's not enough understanding at the moment. And over time, that will get better because people will understand the concept of compound Bitcoin and then how you value that, you know. Like if you said to me that with my stock right now, you've got to pay, you know, a 10% premium, you know, compared with buying Bitcoin. What you're saying there is that, assuming that the company's managed properly, of course, which obviously it is, you're only paying 10% above Bitcoin for all of the future Bitcoin that we will generate through our strategy. And, you know, in the last quarter, which was a very good quarter, to be fair, we delivered almost 300% return. So this quarter, using publicly available information, you know, we're only 8 days into it. We've only raised a little bit of money. You know, our Bitcoin yield, if you work it out using the publicly available information, is probably about 0.5%. So let's say that you delivered, I don't know, 5 to 20% every quarter for the next couple of years, you know, being negative about it. You know, paying a 10% premium to our stock at the moment for the MNAV it's ludicrous, to be honest. You know, but that's just a lack of, you know, sort of, well, it's partly a lack of understanding, and partly that's the way markets work. Things get overvalued and then they get undervalued, and you know that's the trick, isn't it? If we could all time that one perfectly, we'd all be, you know, incredibly rich.
Recently, there has been some as well evolutions in terms of strategies within Bitcoin treasuries. Michael is definitely talking much more about the credit markets and the Bitcoin-backed credit and the differentiation of a Bitcoin treasury company that is laser eyes focused on issuing digital credit. We've seen as well a lot of consolidation starting to happen. Not a lot, but significant with Semler and Strive. What is your view on, and there are much more flavors of Bitcoin treasuries, I think, to come as well, from what I hear. What's your view on this, on the different strategies that are emerging? It's maybe a bit different in the US, where there are tens of Bitcoin treasuries already, and many of them are trying to find another way into it. What are your thoughts on these different flavors of Bitcoin treasury company strategies, and what's your anticipation for the future?
Yeah, so I believe that every business, private or public, should hold Bitcoin on its balance sheet to some degree. You know, if you're a business and you've got any cash, then clearly Bitcoin is significantly better than cash for most things, apart from short-term needs. You know, maybe cash is better than Bitcoin on a very, very short time period. So yeah, every business, in my opinion, should have some sort of Bitcoin. Now, the question then is, what is a Bitcoin treasury company? So for me, a Bitcoin treasury company is something like what you do and what I do, which is we actively try and grow the Bitcoin per share. So that's the pure Bitcoin treasury company. But you could also have a Bitcoin treasury company that is just a company that is using its excess capital or its revenue to buy more Bitcoin, which is effectively doing a similar thing. What I think people need to work out is, what are they looking for in these companies So with a company like ours, it's the concept of compound Bitcoin. That's the key thing there, the Bitcoin yield. Whereas another company might have a product that is particularly profitable or has got great growth potential, but there's different metrics, and I don't think those metrics exist yet for those sorts of businesses. So I personally, because my portfolio is pretty much 100% in Bitcoin and Bitcoin Treasury companies, so I would welcome there to be some sort of different types of businesses out there that are good. There's one coming in the UK, a recruitment business that is adopting a Bitcoin Treasury strategy. They've had it for a couple of years. They've got, I think, 10 Bitcoin, a private company, and hopefully they'll get listed and buy more, and they use that for lots of different things. Run by a really great guy as well. For me as an investor, I would quite like more companies to come up that have got different models, but all share my view of Bitcoin being the best asset in the world, because that would give me some diversification in my portfolio, but still being things that I like investing in. What we see ourselves doing in the future is following a similar path to people like Strategy, which is becoming a company that is effectively building different products on its balance sheet. But we need to be the right size to do that. We think that we've got a really good strategy that we're working on at the moment, which we're not allowed to talk too much on, which will give us some additional leverage, which is very, very similar to what Sailor's done with the pref shares, for example. So we're quite excited about that. We think it's a good stopgap until we get, say, 10 times the size of what we are at the moment. So it'll give us a similar benefit, well, probably a slightly better benefit, to be fair. So that's going to be quite exciting when we're bridging that gap, because we fully believe in the idea of using our balance sheet to effectively build these other products, so we can create non-equity products, i.e. things without risk, or with less risk. There's always a risk, for people that would want a better product that they can get. So, for example, an 8% interest rate, but they don't want the volatility of Bitcoin itself. So obviously ourselves taking that volatility in a combined phased approach on our entire balance sheet, and then being able to offer that to those people. So yeah, we're quite excited about doing all that side of things as well. But obviously it takes time to get to that size.
Do you think there are any risks to consider for investors in Bitcoin treasury companies? Maybe to precise my question, what would be your answer to an investor that feels that he is taking a lot of risk because he may not yet understand fully the Bitcoin treasury company? So the question is more towards how do you value a Bitcoin treasury company? You mentioned that you had a discussion with an investor that did not know about Bitcoin yield. I had a discussion this morning with one of the leading asset managers in the world, and the question was still why a Bitcoin treasury company versus Bitcoin. So I think, as you said, we are very early in terms of education, but at the same time, it's also our responsibility to explain, which is of course one of the objectives of this session. So what is your articulation of the value proposition of a Bitcoin treasury company, and as well, what are the risks to consider for investors?
So that's why we use the phrase compound Bitcoin a lot, because Bitcoin yield is quite confusing to a lot of people, which we use that phrase a lot as well, because of the traditional finance meaning of yield. So we use compound Bitcoin as a phrase quite a lot when we're explaining to people, because it comes up all the time of, why would I want to buy your shares versus buy Bitcoin, for example. So we use that quite a lot, but we're also very keen to highlight the risks to people. So what I do personally is I look at most of the metrics. So I look at things like MNAV, but I very much look at the historic yield that the company's achieved. But then I also look at my interpretation of the ability of the company to raise equity, or other types of finance. I think investors need to understand all of those things because, when I was so after we were in the States together, we did a couple of days speaking to investors. One of which we announced on Monday has invested in our company. So we met a series of different investors through two different banks in America, and MNAV came up a lot. But the thing that Jesse, who works with me, and I were saying afterwards is that there's a lot of focus on investors on individual metrics rather than the metrics as a whole. And like MNAV is a great example. MNAV is quite misleading when just looked at alone. Because MNAV is a point in time. It's literally your market cap versus your assets. But it doesn't factor in the management's ability to raise capital. It doesn't factor in anything other than what it does factor in. So that was quite surprising that a lot of quite big investors were looking at that, and some of them were saying, well, so if something's trading at below 1 MNAV, then surely it's a great buy, rather than something that's trading at, say, a 1.5 or a 2.5 MNAV. And we had to explain to them that not necessarily, because a lot of the time that might mean that the flywheel stopped. Just because something trades at a discount, that doesn't mean to say that at a point in the future it will trade at a premium. And I'm not saying that if something does trade at a discount, then it's not a good buy. I'm just saying that you need to understand that alongside all the other metrics. But you said it yourself, Alex, that it comes down to the education, and that's why you do a great job of it. We're trying to do the best job that we can of it, of speaking to lots of people and trying to help them understand this stuff. And it will take many, many months for the majority of people to understand what a great opportunity a well-run Bitcoin Treasury company is. It's still such a small portion of people that invest in these things. And obviously, as things change over time, that will grow and grow and grow, in our opinion.
Recently, I had a discussion with Richard Byworth, and we discussed the topic of the share buybacks. And one of the convictions of Richard is that if a company is trading at a discount, it could be in a position where the company should sell Bitcoin to buy back shares. And I said, Richard, you never sell your Bitcoin. I'm not in principle against share buybacks. In fact, I think that's an option that a company should definitely keep an eye on and potentially use when it makes sense, if it makes sense. But the buy-selling Bitcoin is where I'm lost, and I disagree. So where do you stand in that respect in terms of negative MNAV or MNAV1 in those scenarios, and what do you think a Bitcoin Treasury company should do or prepare or do in that scenario in general?
Yeah, so I'm not a big fan in the UK of share buybacks, because when they're used in the UK, as far as I'm aware from the research that I've done anyway, they don't actually make that much difference to the share price. So I think particularly, obviously we're not a particularly small company now, but for a smaller company, I think you would probably see that the market would take take advantage of the buyback, and it probably wouldn't be that beneficial to your shareholders. So I think what you can do though is you can do other things when you're in that position, or if you're in that position, to to show more value, because like if you're trading at below a 1M NAV, in simple terms, you wouldn't sell your equity, because it's not accretive to the Bitcoin per share. But if you've got a clean balance sheet like us, for example, you may decide that that's the ideal time to take some debt, and that doesn't have to be convertible debt either. So if you've got a strong balance sheet, you can generate more capital, without without even diluting shareholders, by increasing the debt profile of the business. Starting from zero, you can afford to take on some debt if you're careful about it, and then that can be incredibly beneficial. So obviously that doesn't answer your question directly, other than saying that I don't really think share buybacks are a particularly great thing. But of course, as you said, you always look at them. But I think in that particular scenario, you can increase your Bitcoin per share, which ultimately is what your investors are interested in. And me personally, as an investor in the SmarterWeb company, I wouldn't be very impressed if the CEO started selling the Bitcoin. And obviously, I'm in a fortunate position that I am the CEO. I shall not be doing that. So we would never say never, because we will do anything that's for the benefit of our shareholders once it's been debated and modelled properly. It certainly wouldn't be even close to the starting point in the conversations, and I'd be very surprised if we ever did, sell Bitcoin to buy shares back. I just don't think that we would do it, because I think there's other strategies that you do when or if you're in that position.
Yeah, that's also something I mentioned. Actually, that was one of the key aspects of Capital B since the beginning, is that we actually started with the issuance of convertible debt at premium in BTC denominated. And that was even before launching an ATM type program. So that's quite unusual. And we've seen with pipes and companies starting with ATMs, but not having other types of tools. In that respect, you have launched as well a version of converts. Do you want to share a bit more and perspective?
Yeah, sure.
Yeah.
Yeah, so just for full transparency, I do own a lot of Capital B shares, actually, because I think you're doing a great job, and I believe in the company over the long term. And I remember the not when you first announced the strategy, but I remember clearly the day when I read the announcement when you did the 50 million euro convertible bond. That, I think, if I'm correct, that was the first moment that had been done anywhere, and it was fantastic. And I remember I was sat on the train waiting to go to London, and I remember reading it, and I was like, how the hell have they managed to raise 50 million euros? This is incredible. So yeah, I'm obviously a fan of your work, and I read how you structure your things. I read how everyone structures their stuff. I sort of read all the things that are out there, and then I try and take the elements that I like for ourselves, which is perfectly fine, I think. So when we decided that we wanted to add a bit of leverage to our position, because we've got a different model to you, in the sense that we didn't do that from the start like you did. We used my experience of the equity markets in the UK to do it as we've sort of done it. But then once we got a reasonable size to our balance sheet, we thought, well, if we took some debt on, but not fiat debt, we could kind of give leverage without any of the downsides of leverage. So that's what we were trying to achieve when we decided to do a Bitcoin denominated bond. But it's very different to yours in the sense that the duration is mega short. So it's 12 months. If we do it again, which we almost certainly will, probably pretty soon, we'll probably do it for 18 months, maybe 2 years. I don't know. That'll be negotiated based on what the company and the investors want. And it simply just allows you to, give, say, in our case at the moment, about 6% leverage on our balance sheet, which basically means that if it doesn't convert into equity, we lose that Bitcoin. It goes back to the investors, So it's leverage without any of the downsides, and I think it works quite well. I think when when people see what we're going to do with the other things that we're doing around everything and how they all interlink together, it will be something that people really see what the point of that particular thing is alongside everything else. And I don't know, I'd be interested to ask you a question, but for us, for our ATM style facility, which is very unusual in the UK to have an ATM style facility, and I think it is unusual in France as well. That's a massively important part of our toolkit. Probably 25% of the capital that we've raised has come from our ATM style facility. And that would be the question that I'd have for you, which is, how do you see the importance of your ATM style facility alongside everything else that you do?
So the ATM discussion is quite interesting, actually, and it can be a very long discussion. A lot of debate is happening due to of course, the impact of the ATM on the share price, confronted with the impact of the ATM of the BTC yield. And so you have a conflict between investors that have a more short-term duration in terms of the investment that they have, or they have a long-term view, but they are asset managers, and they also have short-term obligations to their own investors. And in that respect, then the MNAV is quite important for them, and effectively, by selling shares and transforming that into Bitcoin on the balance sheet, then at a constant share price, all other things being equal, then necessarily then the MNAV compresses a little bit due to the ATM. But then that conflicts with the key objective of a Bitcoin treasury company to maximize BTC yield, at least what I consider a real Bitcoin treasury company. And in that respect, the ATM, when looking at strategy, has been absolutely key, not necessarily in the short term per se, but especially in the ability of strategy to issue credit instruments that are highly accretive and that transform a potential short-term compression in the MNAV for the ATM into a maximized BTC yield, because then the BTC yield of the ATM in terms of the potential share price implication compounds with the BTC yield that has been added as a result of the issuance of the credit instrument. And so in that respect, the results of an ATM program, it's an intuition, but I think it could be definitely looked at for strategy, can be seen a bit later on than the results of the issuance of a credit instrument. And for example, a lot of discussion has been happening for strategy between the end of last year and early this year on the use of the ATM, but strategy has doubled its Bitcoin stack. And due to this, then it doubles their capacity to issue preferred instruments as well. And then nobody is sad when capital is raised through the preferred. But the preferred capital raising is also accelerated by the ATM. And so when looked at in a closed environment, the ATM can be considered from a fiat mind as a potential risk for a share price. At the same time, on a Bitcoin standard, it increases the core value of the share. And then you could also argue that depending on the company, there are levels where it makes more sense to activate it or to accelerate it or to slow it down. In our case, it is under as well the responsibility of TOBAM from an independent perspective to manage that carefully and not push too much on the ATM at the same time that accepting as well that some level of ATM under the conditions that we have, meaning when the share price is in strength, is still a very valuable tool for a Bitcoin treasury company as soon as you are able to generate a BTC yield with that operation. And so while you could argue that you would of course prefer to do ATM at MNAV 10 every day, that's for sure, but still an ATM at MNAV 2 or MNAV 1.5 is accretive on a Bitcoin standard, can be a bit of an impact in a share price, even if done carefully, but still it implies some selling of shares. But in the long run, I would argue even in the medium term, then that allows the company to scale much faster and further into the issuance of credit instruments. And so in that respect, I would not analyze an ATM efficiency only in a closed environment. I would consider the overall strategy of the company. If that ATM is the only tool of the company, then you can have serious questions. If it is not the only tool, then you can argue that the objective of this ATM is effectively to over time build up that balance sheet for the issuance of more credit instruments. And so I think that's a key aspect. And on our side, the ATM has been a lower contributor to date, mostly because we've launched it back in June. And then the share prices of the Bitcoin treasuries, ours included, has been going down compared with 3 months ago. At the same time, it's allowed the company to continue adding Bitcoin per share for long-term minded investor in a way that is extremely accretive. And so I think that can extend to equity issuances overall. In fact, I saw that you conducted a transaction recently. The same observation could be made by investors to say, if you are going to do an equity issuance in the market without a major premium like in the credit instruments, then what is the accretiveness of this operation, because it includes more shares that could be sold in the market. But then it's it's a very similar answer. First, it depends on the type of investors that are added to the balance sheet. In our respect, we did a major capital raise of 58 million euros recently. It happened that after this transaction, the share price went down by 30 to 50%. The market is very large and you can have a lot of explanations. One explanation can be that one advantage of the transaction was to add 35 financial institutions to the capitalization table. And in fact, at least most of them, are very long-term oriented and wanted to take a position into the Europe's first Bitcoin treasury company. But through the process of institutionalization, you go also from under the radar to above the radar. And so you have all of these institutions in the world that discover that there is a Bitcoin treasury company that is extremely comparable to Strategy and Metaplanet, but they have not shorted yet. And in that respect, the firepower of institutional professional short sellers can be much larger than the daily retail demand and even institutional demand that are participating in the market. I think that this is also in some way a transition that is a bit painful, but that is showing that even with this, the company was able to do a 58 million euro operation at a 2.3x premium. So, then you look at what is the price of the deal, and in our case, with the volatility of the share price, and with also the market practice, to some extent, there was a slight discount. At the same time, it was at a massive premium because it was a 2.3x premium in terms of MNAV. And so then you could argue, would it be better to not do this deal or to do this deal? And then my answer is, on one side, you have a certainty, which is to increase BTC yield by 7% on one single operation and add 500 plus Bitcoin on the balance sheet. And then you have an uncertainty, which is the market response. And so then as an investor, you can choose to analyze the market response in the short term, which was deceiving, frankly, or to have a bit more time horizon, a bit further down than 1 month, So in that respect, we will see how that plays out, but we can be certain that the position of the company is much stronger with 500 BTC more on the balance sheet and a very accretive operation with close to 10% of BTC yield than without this, because then it's comparable to the discussion on the, the share buyback.
It's a tough one though, because when you raise that money, you raised a significant amount of money when, like now, it's very difficult to raise any money. So there needs to be a big credit for that. And then obviously, you did do it at a small discount, but you were trading at a pretty decent MNAV relative to what a lot of companies are trading at now. So I haven't got the right answers, in terms of what the right thing to do is, but there is a very strong argument that the price was going to come off. So you'd be better off to take the price end. So if we look at an example that's nothing to do with the two of us, unless you've got an investment in them, but if we look at, say, Strive, and when they announced the takeover of Semler, or merger, whatever they're calling it, you can say that perhaps they realized that their share price was going to come down dramatically, and they wanted to lock in some of that MNAV that they had when they did the deal with Semler, which was, a couple of weeks ago. So it's a difficult one. And when you're running one of these companies like you do, I do, it's very difficult to make the right decisions. And I think that that's all you have to do. You have to do the right things that you believe for your business for the long term. And I 100% agree with you that by generating that capital and increasing the Bitcoin yield, but also having a bigger Bitcoin balance sheet is very sensible. If you look at us, for example, the raise that we announced on Monday morning, a small raise, just under £10 million, in addition to some from the ATM. That's not that much higher than a 1M NAV, but it still produces a positive Bitcoin yield, everything else being equal. But exactly what you said, that when people view that, like they view that or they view the ATM, but then they're aware of the other things that we're doing and they see the combined effect of all these things, it's incredibly beneficial to the company. And you need a bigger and a bigger and a bigger balance sheet to be able to do that. And so that's why it's quite frustrating as the CEO, right now, without sort of digressing into things that I'm not allowed to say, because when people can see the full picture and they can see where we're heading, and obviously we have to announce things at certain points in time, everything will make a lot more sense. But I guess that's just part of the job, isn't it? There's things that you can say at a point in time. There's other things that you can't say, and ultimately, people have to trust you as the CEO to do what's right for the company, and that's why I'm grateful that the majority of people seem to trust me as the CEO of the SmarterWeb company to steer the ship through challenging waters, and hopefully get us to the other side.
Yes. Yeah, what I wanted to mention as well is there are some propositions, including the share buybacks or including the proponents of not doing ATM if there are exceptions because you also want to do it responsibly and there are conditions, and in fact what we do is not really an ATM, and it has a lot of conditions only when the share price is in strength, and I mean it's quite a lot of conditions, and there is also a limit in the moving average and so on. But in any case, some of the solutions imply it's a form of fiat response in a way that if you buy back shares, you can, but then you are uncertain of what will happen to the share. An example that I mentioned is you buy back shares and then Bitcoin drops by 20% the next day. Well, potentially, unless you were in a negative MNAV situation, in which case the company can activate a lot of options, of course, but in that case, potentially, if you were not in a negative MNAV position and you chose to use capital to buy back shares instead of buying Bitcoin, then you just wasted capital potentially. And that's something that is quite important as well in terms of what is the accretion of an equity raise as well, is that you could have a share price that goes down by 30 to 50% and not have raised 58 million, So then you can see that everything has to be considered in a specific context for a company, and as you said, you do the very best thing for the company day to day, and we will continue to do the same by being very careful in terms of the impacts even on a fiat standard, because we definitely consider this, and the reaction, and not necessarily the reaction, but what happened over the last months, I think should also be taken into consideration, and I think there are a lot of things to consider for the future. At the same time, we did the very best, and that was what was the most accretive for the company. So
one of the things that we, or one of the objectives of the raise that we announced on Monday was, of course, it was to generate a small amount of Bitcoin yield, but it was also to send a message out there to the market and to other investors that, we're still pushing forward even through tough times. And, I've had more than one institution that I wasn't speaking to before get in touch. It's only Wednesday today, so this is 48 hours. 24, 48 hours. Get in touch and effectively respond to what we hoped they would see by that. And so that's another thing that some people, like, you wouldn't do a bad deal, but sometimes you will do a deal to then help generate other deals, as well. So there are lots of things that that people don't necessarily see when they see some of the things that we do, and that's why I think the trust thing's quite important. You clearly love your business, and I very much love my business. I describe it as, my middle child. I've got two kids, but I make it out like I've got three. The SmarterWeb was born in the middle of the other two, and 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 people, I think most people realize that we care about what we do, and that's why we do it.
Yeah.
And so we're clearly going to do the best for the businesses as much as often as we can.
We are approaching the end of the session. I would like to end on a positive note with these challenging times for Bitcoin treasury companies, which are actually great times as well, because in some way it allows the companies to accelerate towards the transition in credit markets. And so you mentioned that you are in it for the rest of your life. Can you describe what makes a Bitcoin treasury company the opportunity of a lifetime?
Well, we are building our business on the very best asset in the world, Bitcoin. So if you've got an incredibly well capitalized business, with currently no debt, but at different points in the life cycle, small manageable amounts of debt, you're effectively investing in a company that's completely different to most of the companies in the UK. Most of the companies in the UK have got really poor rates of growth. With our philosophy, our balance sheet will grow on average, let's say 30-ish% a year, which is completely different. And yes, we might have some debt at some point, maybe 10-20% of our balance sheet, but there's loads of businesses that people invest in that wouldn't be alive if they didn't rely on fiat debt. So with a Bitcoin treasury company, it's a completely different thing to what people have seen before. And then if you believe in Bitcoin and you want to invest in something that's similar to that, well, a Bitcoin treasury company is even better, because it's the compound Bitcoin, the Bitcoin yield. So I think people need to understand them, and then you compare it against, to say, so one of the only companies that I've got some shares in that isn't Bitcoin related necessarily, even though clearly there's an overlap, is Nvidia. Their PE is like 50 years or something. It's ridiculous, really. But it's a great company, and obviously I use ChatGPT pretty much every day. So obviously, I've got some shares in it, or technically it's my son that's got some shares in Nvidia. So great company, but PE 50 years, ridiculous. And then you compare that to a Bitcoin treasury company, like us, 1.1 MNAV or whatever, so 10% premium you're paying for the compound Bitcoin. If people can't be excited about the opportunity that they've got for this amazing sector that's going to be the most profitable, the biggest sector in the world forever after a few more years from now, and they can't see how exciting an opportunity this is, then I don't know what we can do about that.
Well, thank you so much, Andrew. Is there a final message that you'd like to send to Capital B shareholders and SmarterWeb shareholders?
Well, I don't know whether we should talk for another hour, because when we've been talking, Bitcoin's gone up by something like 1%. Maybe even when we wake up tomorrow, it will be a new all-time high. We'll have to wait and see. It doesn't really matter what it does in the short term, but that's just a bit of fun, that comment. What I would say to our shareholders and your shareholders is and by that I'm saying it to myself as well, is you've just got to look at what you've actually bought, or why you've bought it, or why do you believe in this? Is it the right thing for you? Do you think it's going to offer the return that you think that you expect? And in mind, I've got very little doubt in the well-run Bitcoin Treasury companies like yours and mine, that it's going to offer outstanding returns, over a relatively short time period, a year, 2 years, and exceptional returns after that. But that's just my opinion. People, I think when people go through the times when the market isn't so kind, that's a good time to look at what you bought, which obviously you should have looked at this at the start anyway, what you're buying, as opposed to when times are tough. But it is a good time to look at, that will show your conviction in what you've invested in. They always say that the time that you should be buying is like now, when there's blood on the streets, and the time when everyone's at peak excitement is the time that you should be selling. But I would say to people, look at the history of Bitcoin Treasury companies, and Metaplanet's a great one. When you look at the MNAV compressions and expansions, 4 in their life, and then look at how strong Bitcoin looks at the moment, and it almost certainly isn't the time to be selling. Really, it's the time to be buying. But that's clearly not investment advice, because I'm not allowed to give that.
Thank you so much, Andrew. Very happy that you came in this session, and I'm very much looking forward to our next opportunity to meet. And thank you for being a shareholder, and thank you for your kind messages to all communities, and hello to the SmarterWeb community as well. I think that's one of the best communities out there, very much engaging, and very much as well value producing every day in terms of analysis and so on. So thank you all, and of course thank you to the Capital B shareholder community as well, both on X and on Discord, extremely active, and we very much look forward every day to look at your comments and so on. So please let us know what you thought on the comments, and we'll be happy to react and comment as well. Thank you so much all. Cheers. Bye.